Hey everyone, John Henry here, Slingshot Futures Trading Group. Welcome back. This time around we're going to be taking a look at V-tops and V-bottoms. More so V-bottoms. V-tops are a little bit harder to pull off. But what are they? How do they work? How do you use them? Right? So the first thing to understand is what a V-top or V-bottom is. It's very obvious. It's kind of derived from the name. Looks like a caret on your keyboard, the caret symbol, or it looks like the like a V. Pretty straightforward. So what we can look for is essentially what is the context of this move. Is it flushing down to test a level of support? Is it flushing down through a swing low that might have been a stop run? A lot of things kind of go into what's going on for that V-top or V-bottom. As an example, the one more recently that we had is not exactly a perfect V, I guess, but down here where we opened up and just had a solid drive off and then all the way back up again. It just totally reversed. So how do we use this information to our advantage? Well, first of all, depending on where the market is, can tell you if the market's beginning to get a little bit overextended. Obviously, this move down was starting to work in towards the third standard deviation off VWAP. That's very oversold. Now, it doesn't mean that the market will stop. It can definitely cut through those levels. Don't think of these as hard barriers, but these are zones of interest. And if it's bouncing off of those areas so aggressively, chances are there's not just going to be, a small little pullback. It's usually going to be indicative of several little tiny pullbacks that aren't getting anything done and usually trapping more sellers. So what that'll look like is the market will just pile drive its way down and then it will start pulling back, shallow move up, shallow move up, shallow move up, right? It just keeps trapping more sellers along the way, and it ends up causing this massive flush where they're all getting stopped out. So here we can see that really, really strong move down, and we're starting to reverse up. Now, we don't know that it's going to be a V-bottom at this point in time, right? This could easily just be a pullback before another move down. So our first check, what are we looking for? Is the market considered overbought or oversold? Well, it's down in the third deviation. So I think it's pretty safe to say that it's a little bit oversold, might be a little bit more poised for a bounce. Are there any other things that we can use to give us a clue that something might happen here? Well, maybe there's a measured move. We've got that first drive down, second drive down, third drive down, kind of looking like maybe the measured move is off this. There we go. So we've got a nice little measured move down there as well. There's a lot of things lining up. So there's clues that this might be a V-bottom, but we don't know yet. And there are sellers who obviously tried, and, well, they got stuck. And that's where we start getting clues. Wait a minute. This might be a V-bottom. We're now seeing really weak pullbacks and big traps, big blow-offs. And then when it comes back, it gets sellers involved, and then big blow-offs. Very nice clues that the market is showing good conviction to the upside. And eventually, you will see a corrective phase that's a little bit larger. And that all sort of depends on where the market wants to do it. Sometimes it does it ahead of time. Sometimes it does it after it's broken above the high that kind of started the V. But regardless, you're usually going to see a deeper pullback, and the market will then, that's where all of the sellers are basically positioned to try to get out. They've been selling and selling and selling all the way up, getting stuck and stuck and stuck, drawing their average up. It finally dips far enough for them to scratch the trade, and the market then rocket ships back out of there for another two good legs, sometimes even more. And one of the big things, one of the big characteristics that you want to look for is eventually you do want the high of that V-top or V-bottom to break. You could say that the V-top or V-bottom happened down here. That's fine too, or at whatever swing high, swing low you want to use. But the high has to break. And once that breaks, that gives us a clue that the market is typically going to move up about one deviation of the size of that V, which is usually just a negative 100%. So when the market starts reaching up into that zone, characteristically, that's where selling pressure is going to start coming in. You'll notice no selling pressure came, well, a little bit. It bounced off of it for a second and then kind of continued through. That's a clue that that's not the one they're looking at. Otherwise, there would have been a stronger resistance. So we can go up to the next one. Maybe it's this one, right? So we can kind of use this and work our way up and see, okay, are we seeing any levels of resistance here? Obviously, yes. So this is one that they are definitely using. And then we can go even further because they did eventually break above that one, and you can kind of see how you can get away with this. Just keep going further and further back until you find the one that's actually respected. And eventually, there will be one. But this one just kind of kept going through, and that is where you're looking for the full one-ups, the full double-ups of that V, meaning that you take the high and the low and then you transpose that box to the top, and that gives you a 1 deviation move up. That's basically 1 to 1. And then you also want to look for a potential 2 to 1 move if it's a very, very strong drive higher. And here you can see this this went all the way up to 2 to 1, and that 2 to 1 put a lid on the market for the better part of an hour, 2 hours today before it was finally able to work its way back up. And then now here we are much further higher than that. So that's really what you're looking for in the V-top and V-bottom, is seeing, first off, you don't know that it's going to happen ahead of time. A lot of people might have been thinking, hey, this might be a V-top or V-bottom, in this case a V-bottom. So there'll be some buyers in there, but until you really get that drive up in the break of where it began, you don't have proof that it's actually finished. And all of the buyers that were trying to get that going, well, they just got ran over and it dropped back down. So you got to be cautious. Buying into these or selling into these too early usually means you're going to be the one holding the bag. So just be careful with that. But these V-tops and V-bottoms can give you fantastic projections where the market is likely to go. That way you know objectively where things are going to tend to want to drive up to or down to, and you can try to hang on to some trades a little bit longer to see if those objectives can be met. But that's going to do it for V-tops and V-bottoms. Hopefully you found it useful, interesting, entertaining. As always, underneath the video, make sure to like, favorite, subscribe to the channel, all that fun stuff, so we know you like the content. If there's anything that you want me to do a video on, drop those in the comments section. I always check the comments, and I'll be able to potentially make that into the next video for you. Aside from that, though, if you have any questions, make sure to send me an email, jhb@ssftg.com. Don't forget to swing on over to ssftg.com and check the free 3-day trial right on the main page there. Have a great one, and we'll talk to you all on the next. Thanks.